And yes, what is this custom duty? Custom duty is nothing but the tax levied on import and export goods. So come, let's go with some meaning. Yes. Custom duty is an authority in a country responsible for levying and collecting custom duties of the controlling goods flow in and out of the country. So custom duty is nothing but a duty levied on import and export. So why are we levying tax on that? If we are importing and exporting the goods, we are levying import and exporting taxes to maintain the consistency and flow of in and out of the goods from our country. So come, let us understand the calculation process of this custom duty. So this is the format of custom duty. So first is FOB, that is free on board price. So for the small note, this will be mentioned in the questions. We should not struggle very much to find it out. So they will be mentioned in the question. We have to add all the cost of transportation. So this is very crucial thing. We have to understand which transportation cost should be included and which should be ignored. I'm gonna give you one example for that. I am importing goods from China to India. I'm importing goods from China to India. The expenses or the cost incurred, well, this is called transportation cost, which should be taken for consideration. The import charges or the transportation cost which is held while importing goods from China to India, that cost should be considered, and this should be this transportation cost should be included, means this should be added to our calculation, and the transportation cost which should be ignored is my goods are landed to Indian port. I am taking goods from India port to my factory. This transportation cost should be ignored. We have to consider only this part, this transportation cost to our calculation of accessible value, not the cost which we are incurred to transport my goods from India to my factory. And the third is we have to add back cost of insurance, and we'll get, after adding this 3, we'll get CIF price, which means cost of insurance and freight charges. So for freight there is a separate calculations. There is a 3 mode through which we can import goods. One is by land, second is by air, and third is by port. If you are importing your goods by land and port, you have to take the actual value which will be mentioned in the questions. If you are importing goods through air, there is a calculation, that is freight by air 20% on FOB, and FOB calculation, FOB will be given in the questions on FOB, 20% on FOB or actual, which will be given in the question. Comparing this, we have to take whichever is lower value. After all this, and yes, another important is cost of insurance. If they have not given actual insurance value in the question, we have to take 1.125 percentage on FOB. This will be solved in further questions, then you will understand. This is a video where I am making you familiar with the format. And loading, unloading, landing charges. Landing charges is not applicable according to the new amendment of 2017. It is taken irrespective, even though we are not considering it. For general information, it will be 1% of landing charges, and we have to write not applicable. After adding all this, we'll get assessable value. On this assessable value, we have to calculate basic custom duty. If you want theory video for custom duties, you can write it in the comment box and I'll make it for you. Basic custom duty, we have to do at the given rate. If they have given a 10% or 20% on that, we have to do upon assessable value. We have to calculate the rate and we have to take the value, and we have to add social welfare charge cess or charges. Before and all, we used to calculate education cess and secondary cess. According to the new amendment and changes, we are calculating social welfare. So on BCD, on this value, we are calculating 10% SWC. After this, we have to add assessable value BCD SWC. We'll get assessable value for IGST. That is, I have written in Roman 1. On that IGST, usually it will be 18%. If they have mentioned separate percentage like 28%, you have to take it. Upon this, we have to do, and we'll get upon the after adding all this, we'll get total custom duty. If you want, you can round it off. We have to round it off to 10. Okay, we'll go with questions now. So the first question, it is very simple and it is very easy to understand. If you understand the sum properly, then all the further questions will be very easy. There will be small adjustments, but it is very easy to understand. It is very simple chapter and it is very easy to understand. Please go with the flow. For the following particulars, determine the assessable value for the imported equipment. Give an explanation for each items. So some XYZ person is importing equipment. So these are the explanation with it, what he and all are imported. FOB, as it is free on board charge. Cost of equipment is, Japan is in 2 lakh, that is 2 lakh N. Freight charges in Japan is in 20,000. Charges for development connected to equipment paid in India, 60,000. See, for the C point, there is an important note to be taken down. I'm going to explain you while I am solving the solution. Insurance charges paid in India for transportation from Japan. Commission payable to agent in India, 15,000. See, even for commission, there will be same wordings, commission, but the perspective of understanding level should change. There will be small differences here. So this is also very, be conscious while reading the question. We have to analyze question properly to solve answer fast. Exchange rate as per RBI is 1 for 1 N is 0.58. Exchange rate as per CBE and C is 1 rupee, 1 N is equal to 0.60. Landing charges 1% of CFI. Yes, this is the format, calculation of assessable value, particulars, N, and the exchange rate. For this exchange rate, I'm gonna tell you the note. If you want, you can write it down. See, if there is 2 exchange rate given in the question, either it will be by, there will be 2 exchange rates mentioned in questions. mentioned. One will be of RBI given rate. Second will be CBE and C, Central Board of Exchange and Custom given rate. Do not get confused, always take the exchange value given by CBEC. So we'll see the question once to understand it. See, exchange rate as per RBI they have given as 0.58. Exchange rate as per CBEC they have given as 0.60. So which should be considered now? The exchange rate given by CBEC. See, that is what taken it. Exchange rate CBEC 0.60. So in this question we read that all the values are given in N. So why do we need this exchange rate? We need this exchange rate to convert other country currency to Indian rupees. So based on the exchange rate we are gonna convert it. 2 lakh N into 60. If you want, I'll do it and calculate. 2 lakh into 0.60 is 1,20,000. We have written it. Same, even transportation charges, they had mentioned 20,000. For that, we have to multiply with 20,000 into 0.60. We'll get 12,000. And we have to see whether the freight is by air, land or port. In the question they have not mentioned anything like it is by air, so we have to take the actual value. And next, insurance cost. Come, let's see what is given in the question. See, insurance charges paid in India. They have given paid in India for the Indian rupees 15,000. So they have mentioned actual value. As I had said, if they have not given us 15,000 or they just left not mentioned or not actual not incurred, at that time we should have taken 1.125%. Here they have mentioned actual value, so we are taking it as it is. And we saw selling commission 15,000. This is of Indian rupees. We have to add all this. We'll get CIF value. And I said we have to add landing charges 1%, which will be written as not applicable. Then add up this. We'll get 1,62,000. So this is very simple question. This is very easy to understand. This is the calculation of custom duties assessable value. So let us go with the second one. I'm going to tell all the adjustments which is very important in the question. Well, explaining question only. Compute the assessable value for the purpose of determination of custom duty from the following data. Machinery imported from USA by air. They are mentioned clearly it is by air. FOB price is 4,000 US dollar. As soon as you see air in the question, your mind should automatically go for the calculation one part, that is 20% on FOB or actual. Okay, if they are mentioned by land, you have to take actual value. This is machinery value. They have given it and the machinery is imported through air. So if freight charges they have mentioned, if they have not mentioned it as like just freight US dollar 1,200, you have to assume by seeing this it was imported through air, and we have to calculate. To confuse you, they might not give air freight, they might only give freight and they added air here to confuse you. If you are well aware of the calculations, you should be knowing that if you see air in the question, you have to do 20% freight things. Accessories compulsory supplied along with the machinery. So machinery imported is F4000, and without accessories and machinery will be very incomplete thing, so we have to add this 1000. 4000 plus 1000, 5000 will be FOB value. After FOB, what should we add? We have to add insurance charges. Insurance charges not actually available. As I told you, if they are given not actually available, we have to do 1.25 on FOB, 1.25 on 5000. As I said, there will be small confusions in transportation. This is it. See clearly, they mentioned transportation from Indian airport to factory. Hope you remember that when I said from China to India transportation cost is considered, India to factory is ignored. This should be ignored. And freight charges 1200, we have to do calculation, we have to add this. Commission paid in Indian currency, we have to add this. Here exchange rate US dollar 60. So you should not get confused. As I said, there will be two things. If they have given only one exchange rate, we have to consider that exchange rate. Come on, let us see the solution. See, computation of accessible value, particulars, FOB machinery 4000 and accessories 1000. We have to convert it into the Indian rupees. 4000 into 60, 1000 into 60 will get these values. After adding that, we will get 5000 FOB value. 5000 into 60 will get 30,000. We have to add freight charges. Freight charges is air, it's through air, so 20% on FOB. FOB is, sorry, it's 3 lakh. 3 lakh into 20% will get 60,000. Actually it's 12,000. They have mentioned in question 1,200. Hope you remember. And into 60, we have to convert it into Indian rupees and we have to compare it, which is lower. 60,000, we have to add 60,000. And insurance charges, as they said, it is not mentioned, so 1.12% on 3 lakh will get 3,375. And local agent commission 9,300. It was in Indian rupees, so we should not convert it. After adding this, we'll get CIF price, that is cost of insurance and freight price, that will be 3,72,675. Landing charges price will be not applicable and the accessible value will be. So this is also very easy thing. And the new adjustment is freight charges. Hope you are understanding it. Third question. Teco Limited imported some goods from LMP Incorporation of US by air freight. So what we should do here? 20% on FOB. You are required to compute the value for the purpose of custom duty under the Customs Act 1962 from the following particulars. CIF value. Wow. There's no FOB value. If you see in the question, I'll read out the question and I'll explain you. Freight paid US dollars 2,000, insurance cost US dollars 700. The bank had received payment from the importer at the exchange rate of US dollar 60.5, while CBSE notified exchange rate on the relevant date was US dollar 1 is equal to 60 rupees. Make suitable assumptions where required and provide brief explanation of your answers. So in this question, we are not able to find FOB value. FOB value is not given in the question. What should we do? It's very easy. CIF value minus insurance minus will get FOB value. Okay. After FOB value, we have to add back insurance and freight. Okay. I'll show you in the solution to understand the question. And there are two exchange rate. One is exchange rate is the bank received payment imported, exchange rate notified while is bank exchange rate notified is 60.5. 5 and CBSE is 1. Which should we consider? We have to consider notified by CBEC, that is 6 students. This is very easy sum, and take a screenshot of this and try to solve. Pause your video, try to solve this and check my answer with your answer. So we'll go with solution of. Okay, see, CFI value 6,000, we have to convert it, and what was the exchange rate? Exchange rate was 60, which is given by CBEC. $3,60,000. We have to less freight charge, and here for freight we have to take the actual value. We should not do the calculation here. We should not do calculation. Do not ask me for what calculation you're talking about. I'm talking about air calculations which should be done, and I have done it here. The actual should be considered. Hope you're getting it. And I have to minus it. I'll get 3,300. I have to multiply with the exchange rate and I'll get 1,98,000. I have to add back freight charges. Here I am doing the calculation, not in the above. I should know the FOB value. After that FOB value, to know the CIF value, I have to do the freight charges calculation. I am doing it, and whichever is lower is 39,600. I have taken it here, and insurance loading and it's not applicable, and accessible value is 2,79,600. As I told you, it is a very simple sum, and hope your answer tallied with mine if you have solved. So let us go with the fourth one. So the fourth question is, Udita Limited, an actual user, imports certain goods from USA at China port at cost of $1 lakh FOB. So in this question they have directly mentioned FOB. The other details are as follow. Packing charges, it is very essential to import a good, so we have to add this sea freight. Okay, here we have to take actual value, that is 28,000, which is given in Indian rupees. Transit insurance, transit and transact, it is also like transit is means we are importing